Hey folks, David Frost, mystrategicforecast.com. You're looking at a daily chart of the US dollar index, and the reason why I'm making this video is because I've gotten a lot of questions from members lately about, is the dollar, going to make new highs now, or, is there more downside to the dollar? There's a lot of conflicting reports. So I thought I'd make a specific video just on the dollar, give you my thoughts, and then clear up some of the minutia surrounding the dollar and whether it's going to be bullish or bearish going forward. So what we have here, I'm just going to zoom it out a little bit. There we go. No, that's the wrong way. There we go. Okay. So what we had here was a huge run up in the dollar. Okay, and I'm just going to give you a couple of different analytical views or viewpoints on this, just to give a couple of different flavors. flavors. So let's say we're using an Elliott Wave theory. Okay, and I'm not an Elliott Wave guy. There's too many interpretations for the same chart pattern, and usually if you get a dozen Elliott Wave technicians in the room at the same time, you're going to come out with like 14 different possible wave scenarios. But nevertheless, this one's pretty clear in my mind. So if you had a fifth wave ending here, okay, then you have a wave one down really could have ended here if this was real, or here if it wasn't. That's wave one. Two is a wave up here. Three would be down to here. 4 is going to end somewhere up here, and then what you would be looking for is another fifth wave down to make lower lows from here. And that's really one of the better and more clear patterns that I see from an Elliott Wave perspective. But let's put Elliott Wave aside and let's look at it another way. Let me draw out a Fibonacci retracement from the high we made here to the low here, okay? And basically what you have here is coming into a 618 retrace at right about 98. It's technically I think 97, 84, or 86. If this was a spot on to the high and to the low, I just did it rough now. And basically we're going to call it 98. You got a lot of chart congestion in here, okay? And if you come up into this 618 and begin to stall out and move down lower, then I think the probabilities increase that you're actually going to go all the way down and make new lows in the dollar, probably down to the $90 area. And where do I get that from? Well, let me show you. Okay, let's remove that and let's go to a longer time frame. And we'll go, you know what, I'm going to get the continuous chart of the dollar. And let's go to, yeah, we're fine. If you take a low down here, okay, up to the high, all right, you can see that if in fact, let me just move this over, and I'm sorry about the lines on the chart, but that's another, I'll show you that in a second. If you think in terms of you came down to almost the 382, didn't quite get to the 382, okay, making a retracement up, and this is on a weekly time frame. If you started back down, you have your same, fifth wave, wave 1, 2, 3 down, 4, and then 5. And if 5 would come down to the 50% retracement at about $90, it just starts to line up with, I hate to say it, but it just seems like common sense to me that that's the way it's going to go if the dollar starts back down. By the way, let me go to one larger time frame and show you where that stuff came from. Forget this good, better, and best support here. That was from a different time frame. But what you have here is a breakout of a head and shoulders pattern. And, you could come down to test the sloping neckline, right? The downsloping neckline. You can come down to test that before shooting back up. And what I think is going to happen is that we're going to probably bottom out in the $90 area if the market starts back down, if the dollar starts back down. And then on the next leg up, we're going to actually make new highs as high as maybe 110. 108 is actually a number that I've got on my target list, and that puts us right in this area here. 108 is actually this pivot high here, and I think that's a great target. And so if I go back to the daily time frame, okay, just to recap, what we're looking for is to confirm one way or the other. You're either looking for a solid confirmation above the 618, which would be above 98. Okay, if you continued higher and started closing daily above 98, then the odds favoring a continuation move is the better scenario. And if you stalled out at the 618 and started back down and you had any kind of volume and big down days on the downside, that would be telling you that we're probably going to make that fifth wave lower, if you will, but more importantly, we're probably going to go down to the 50% retracement and then bottom out there before making new highs once again. And I think what could happen is, as the stock market rallies into, let's say, June, July time frame, okay, I think the dollar continues weaker, and if we have the volatility in the stock market I'm expecting in the second half of the year, I think the dollar could rally and strengthen as the market has issues on the downside, and that's kind of the scenario I see playing out. So hopefully this answers a lot of the questions as it relates to the dollar and how it plays into the overall market. And anything else, I'll be happy to make another video. Just shoot me an email. All the members, you're more than welcome to. And if there's enough of you that have the same question, I'll do this again. I'll put out a video and post it for anybody to see. So I'm David Frost. Here's to a great trading day ahead at mystrategicforecast.com. Thanks for tuning in, folks.